Hello, this is Sheila, tutor for ACCA's Advanced Audit and Assurance at Elite International College, and in this video we will cover a very popular type of question appearing in this paper, Matters and Evidence, and I will show you how to develop your answer using the question Kowloon from June 2016. So let's read the requirement. The question says, comment on the matters to be considered and recommend the actions to be taken by the auditor. So the word comment on simply means say something about the matter. The manager is reviewing the accounting treatment at the file review stage. Therefore, you are to comment on the current accounting treatment. The question also says recommend actions to be taken by the auditor, and these actions would be to look for any information that you need to obtain so that you can apply the accounting treatment correctly. Then part 2 of the question says explain the audit evidence you would expect to find in your review of the audit working papers. Explain means to state the source of the audit evidence and also to state the purpose of that evidence. So you can't simply just list the evidence, you have to explain it. So let's read the scenario. It's a little long, so read carefully to identify the relevant information and the accounting treatment. It says, you've been asked to review the audit files of Kowloon, which has a financial year end 31 December 2015. The audit is nearing completion. Kowloon works on contracts to design and manufacture large items of medical equipment such as radiotherapy and X-ray machines. The company specializes in design, production, and installation of bespoke machines under contract with individual customers, which are usually private medical companies. The draft financial statements recognize a PBT of $950,000 and total assets of $7.5 million. The audit senior has left the following note for your attention. One of Kowloon's major customers is the Bay Medical Center, a private hospital. In June 2015, a contract was entered into under the terms of which Kowloon would design a new radiotherapy machine for BMC. The machine is based on a new innovation and is being developed for the specific requirements of BMC. It was estimated that the design and production of the machine would take 18 months with an estimated installation in December 2016. As at 31 December 2015, Kowloon had invested heavily in the contract, and design costs totaling $350,000 have been recognized as WIP in the SOFP. Deferred income of $200,000 also recognized as current liability, representing a payment made by BMC to finance part of the design costs. No other accounting entries have been made in respect of the contract with BMC. So the two yellow bits here are to do with the accounting treatment. The two items, $350,000 is the WIP, $200,000 is the deferred income. Next, as part of our subsequent events review, inspection of correspondence between Kowloon and BMC indicates that the contract had been cancelled by BMC as it is unable to pay for its completion. It appears that BMC lost a significant amount of funding towards the end of 2015, impacting significantly upon the financial position of the company. The manager responsible for the BMC contract confirms that BMC contacted him about the company's financial difficulties in December 2015. So from here, you can actually see that we've got a subsequent event here. A customer is in financial difficulty, but the financial difficulty had already taken place before the year end. Therefore, this cancellation is considered to be an adjusting event. Read further. Our audit evidence concludes that Kowloon does not face a threat to its going concern status due to the loss of BMC as a customer. So we're not going to include anything on going concern in our answer. The matter has been discussed with Kowloon's finance director, who has stated that he is satisfied with the current accounting treatment and is not proposing to make any adjustments in the light of the cancellation of the contract by BMC. So what this means is that he's going to leave 350,000 as WIP in the SOFP, and he's going to leave the deferred income as 200,000 in the SOFP as well. So how do you write the answer for matters to consider? We will start off with a major subheading, materiality of the financial statement item. So these items are the items in the question. So the first financial statement item we have is the WIP. So we're going to say that the work in progress of 350,000 represents 4.7% of total assets and is material. You get half mark for that. The deferred income of 200,000 represents 2.7% of total assets and is also material. Another half mark. Now these two calculations are based on total assets because WIP and deferred income are both in the SOFP. Thus we're going to divide the figures given in the question by total assets. So just one point here. Marks for materiality will be given only if it is relevant, meaning that, taking the example in this case, WIP is in the SOFP, therefore you need to divide it by the total assets and get the materiality figure from there. So marks for materiality are only if it is relevant and the calculation is correct and that there is a valid conclusion, meaning whether it's material or not material. Alright, another point in this question is that when you want to find out whether something is material or not, you are going to consider some standard percentages, and that is, it will be considered material if that calculation is more than 5% of profit before tax, if it is more than 1% of total assets, or if it's 1.5% of revenue. But the calculation has to be relevant, meaning that WIP cannot be divided by the revenue figure. It doesn't make sense. WIP is in the SOFP and revenue will be in the SOPL. So after materiality, we have to move on to the second major area, which is the accounting treatment. So what we have to do now is to identify the accounting treatments in the question. So how do you know where the accounting treatments are? Well, let me give you some clues. First, look for things that are happening in the question. Number 2, look for the dollar values in the question. So, what has happened in the question? The question tells you that BMC cancels the contract after the year end. Why did they cancel it? Because they were facing financial difficulties. We also have the information that BMC was facing financial difficulties even before the year end. Therefore, this is an adjusting event. And what this means is that the figures in the financial statements must be adjusted to take this fact into consideration. And it also means that the WIP of 350,000 cannot be left on its own. The deferred income of 200,000 cannot be left where it is at the moment. Something has to be done because of this adjusting event. So let's start with WIP, the 350,000. So the first point here is that the WIP cannot be recovered from BMC for the simple reason that it is in financial difficulty. So are we going to write it off? Well, that depends on whether we can use it on another contract. If you can use it on another contract, don't write it off. If you cannot use it on another contract, then write it off. So that discussion of the first green box will give you 1 mark. Next, WIP contains innovation. So can we capitalize the development costs? Well, that depends whether the criteria in IAS 38 have been met. If the answer to that is yes, then we are to capitalize it as development costs. If the answer to that is no, then it has to be written off. So the discussion pertaining to the second green box will give you another 1 mark. So let's move on to deferred income. So this deferred income represents some kind of an advance payment paid by BMC to help finance the work carried out by Kowloon. So now the question is, now that the contract is cancelled, does this money have to be repaid to BMC? Well, that depends. If it is not repayable, then we will have to credit that figure to revenue. But if it's repayable, because it was only an advance payment, then reclassify deferred income to amounts due to BMC. The third thing that you've got to consider here is the fact that it might be possible for you to sue BMC for $150,000, considering that work has already been done for $350,000. We've got an advance payment of $200,000, and that leaves us a balance of $150,000 that we might be able to recover from BMC. Then there's also the fact that we could sue BMC for breach of contract, and maybe consider whether there is a contingent asset that can be recognized. So how would you write out this answer? First, put down your second major subheading, and that is accounting treatment. So what would you say for the first point? The contract for the design and production of a new machine has been cancelled by BMC after the year end, as it is unable to pay for its completion due to financial difficulties, and BMC was already in financial difficulties before the year end. So per IS 10, this is an adjusting event. So why do you say it's an adjusting event? You would have to explain that. It is not enough for you to just say it's an adjusting event. You will have to explain why. So then you'll have to say that as it provides further evidence of BMC's financial condition existing before the year end. Next, if it is an adjusting event, then you would have to explain the action, what you'll have to do, the things that you'll have to adjust. So my statement in the answer would be, therefore the consequences of the cancellation of the contract on the WIP of $350,000 and the deferred income will have to be accounted for. So the second matter under the accounting treatment is that presently the $350,000 is recognized as WIP, and the cancellation of the contract may actually indicate that the costs of the WIP are not recoverable from BMC. Now at this point, we do not know if the costs of the WIP are recoverable or not, so we're going to use the words if to explain further. So I'm saying, if the work done to date for BMC can be used on another contract, the $350,000 should remain as WIP. If the work done to date for BMC cannot be used on another contract, since the contract was designed according to BMC specification, then the $350,000 should be written off and charged to profit. So that'll be 1 mark for this whole thing. So let's continue with the accounting treatment. The machine developed for BMC is based on a new innovation. The amount spent on development, not research, that is part of the $350,000 must be capitalized if the criteria in IS 38 is satisfied. Example, that it is technically feasible, commercially viable, and has future economic benefits. Now, note something. You would have to specify the criteria. You cannot just simply mention the word criteria and leave the examiner guessing whether you know the criteria or not. So you have to finish the whole thing. You have to say that if the criteria in IS 38 is satisfied, for example, technically feasible, commercially viable, and has future economic benefits. Next, if the criteria in IS 38 is not satisfied, then these costs must be written off. So let's move on to the deferred income. So the deferred income is currently recognized as a current liability, and since the contract has been cancelled, the accounting entries will depend on whether the amount received from BMC is repayable to them. At this point, we do not know whether the advance payment is repayable to BMC or not, so we're going to use the words if. So if it is repayable, the $200,000 should be reclassified from deferred income to amounts due to customer. If it is not repayable, since BMC had cancelled the contract through no fault of Kowloon and Kowloon has done its part in fulfilling its obligations, the deferred income of $200,000 should be recognized as revenue. IFRS 15 states that revenue can be recognized when performance obligation is satisfied. So the adjusting entries will be to credit revenue with $200,000 and debit the deferred income with $200,000. Then we can also include another point that Kowloon may even sue BMC for the recovery of at least 150,000 of the monies owing to cover its costs, and may also be able to claim compensation for breach of contract. Then you're going to bring in IS 37 and state that if it is probable that any monies can be recovered, it should be recognized as a contingent asset and disclosed in the notes to the financial statements. So that's 1 mark for that. Next, the question tells you that management is not planning to amend the balances recognized at the year end. Now let's have a look at this examiner's report from December 2017. It says candidates should describe the direction of a risk. For example, if a provision has been omitted from the financial statements, candidates would score 1 mark for stating that expenses are understated and liabilities are understated if the provision is omitted. So we're going to apply this to this particular answer. So we're going to state risk that management will continue to insist that balances will not be amended. Consequently, WIP will be overstated by 350,000, revenue will be understated by 200,000, and the net effect of that, profit will be overstated by 150,000. The next major subheading that is part of this exam technique for this question is materiality of the misstatement. So then we're going to say that WIP of 350,000 represents 36.8% of PBT and is material. Remember the rules that we said just now, marks will be only given for materiality if the calculation is relevant, if the calculation is correct, and you make a valid conclusion. Similarly, deferred income of 200,000 represents 21% of PBT and is material. Now, the reason why we're dividing both these figures by PBT is we're talking about the effects of the adjustment. Earlier we said WIP would probably need to be written off, so that goes into the SOPL, and deferred income would have to be transferred to revenue, and revenue is in the SOPL. Therefore, we are going to include PBT as our base for calculating materiality. Now, deferred income is being transferred to revenue. You could also calculate materiality in relation to the revenue figure, except that for this question, the revenue figure has not been given. And as such, we would not be able to calculate materiality in relation to revenue. So the next subheading under matters, the final subheading under matters, is opinion. So we're going to start off with the word if. If the WIP is not written off and deferred income not released to profit, the opinion will be qualified except for. Alright, qualified except for the simple reason it is material and it is not pervasive. So it's a qualified opinion. Now you would also have to explain why you're giving the qualified opinion here. So I'm using the words seeing that the financial statements are materially misstated due to non-compliance with IAS 10 and IFRS 15. So before we begin, we must understand that the evidence section is based on the accounting treatment part of your answer. So we're going to look at the examiner's report, a comment in the examiner's report in September 2017. And it says, in order to extract marks, the evidence must be explained rather than simply list of documents. This means candidates should state a purpose as well as a source to attract strong marks here. So let's begin. We've got a little title, evidence. Now, before we do the first point, the first evidence, the whole matter in the question started as a post-balance sheet event. So we need to confirm this. So what are we going to say? Written confirmation from BMC to confirm that the contract has been cancelled and the date of the cancellation. Second, the post-balance sheet event is an adjusting event. So you need to find evidence of this in your file as well. So how would you write it? Written representation from the project manager to confirm that BMC contacted him regarding their financial difficulties in December 2015. Next, the advance payment of 200,000 that is now recognized as deferred income. So how would you write this out? A copy of the contract between Kowloon and BMC to confirm whether the cancellation of the contract triggers a repayment of the payment in advance. And this evidence is important because if there is no requirement for a repayment, then the 200,000 can be taken to the SOPL. But if there is a requirement for repayment, then the deferred income must be reclassified as a payment due to BMC. Next, on innovation, we need to have evidence that it fulfills the criteria in IS38. So how will you write this? Notes of discussion with the project manager to confirm the new innovation could lead to a new type of product which is technically feasible, commercially viable, and has future economic benefits. Next, evidence that the WIP is transferable or not. So you have got in your file notes of discussion with the project manager to confirm if the innovation can be used for a different contract. Next, evidence whether the transfer itself is legal. So what do you expect to find in the file? Correspondence with legal counsel to confirm legal implications if this innovation, originally intended for BMC, is sold to an alternative customer. The examiner gives 5 marks in this section, and we put down 6 points. So let's revise the template of matters to consider. First, you have got materiality of the financial statement item, then the accounting treatment, risk, skepticism, materiality of the misstatement, and opinion. So how would you remember all these steps? I use a little trick called MARSMO, M-A-R-S-M-O. I love these little tricks to remember things, and I use this a lot in my classes. So there's one point that we did not include in our answer in Kowloon, and that is skepticism. Skepticism will come in when the question provides you with this year's results and last year's results. And you'll be able to see that the results for this year are somewhat going down, deteriorating. And you can have a situation in the question where maybe a provision needs to be made and the client refuses to make the provision. And you would say that the reason why the client refuses to make the provision is to make sure that the profit does not go down even further. So that is skepticism, trying to understand the motive of the client for not carrying out a particular accounting treatment correctly. So this template, MARSMO, should be a good guide whenever you are attempting a matters and evidence question. So now the overview of evidence. Here there's no real template, but the evidence that should be in the file will relate to the accounting treatment. So now we go on to steps in answering a matters and evidence question. First, read the scenario. Second, identify all the correct and incorrect accounting treatments in the scenario. Third, quickly put down your template and fill in whatever details that you can from the scenario. I'm hoping that this video makes clear the exam technique for this type of question. Try out this template with other matters and evidence questions to see if you can increase your marks. Till next time, cheerio!